heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, we'll discuss the outlook for China's tech sector. And as it's the biggest companies are preparing to report results, how will the slowing growth picture for China actually weigh on investor sentiment?
Plus, we'll talk the state of electric vehicles as EV maker VinFast goes public via SPAC. We speak to the CEO about the deal.
And studio giants offer a new deal to striking writers in Hollywood. We're bringing the latest reporting on that matter. But first, Ed, we dig into these markets. We look at here in the US, strong economic data. Over in China, a slowing picture, and we try and marry it all together, as well as what's happening in the UK. From a macro perspective, the numbers are so strong here in the US. When you look at retail sales rising more than expected, what does that mean for a Federal Reserve that has to keep on perhaps pushing back against a very strong economy? We're off by half a percentage point. The NASDAQ gets hit. In fact, all the major benchmarks here in the United States on the lower side. Interestingly, though, we're buying the dip when it comes to bonds. We've seen, of course, the yields push higher over the last few days, notably when we're thinking about a Fed that perhaps still has its pedal to the metal. We don't see that sell-off in bond markets. In fact, we see the buying on the 2-year and across the curve, as in fact we seem to hit yields that seem appetizing, 4.92, 4.93, let's call it, on the 2-year at the moment. But I bring you an economic perspective across the pond. Over in the UK, just a day after we're talking about IVP opening offices there, really strong wage inflation, 7.8% record number for wage growth in the UK. That means could we see an outsized 50 basis point move from the Bank of England once again? That's what some of the particular Saxo Bank are looking at. We're seeing, therefore, the pound up against the US dollar by 0.5%. Move it on. Look at what's happening in the world of Bitcoin, because look, even though we're seeing actually some more buying in other altcoins at the moment in terms of volumes rising, we're just still at that 29,000 level. We cannot break it when it comes to the OG that is Bitcoin. But Ed, I know you want to drill into really what is the macro picture of today. What's happening in China?
Yeah, the story is concern about China's economy. The underperformance is in the US-listed shares of Chinese technology companies. I'm looking at the iShares China Large Cap, the NASDAQ Golden Dragon China Index, both down in the region of 1.5%. China's central bank cut interest rates, a key interest rate, by the most since 2020. There is concern about the consumer and the property market. This is the picture in the moment. We also go to the year-to-date picture for US technology in public markets versus China. And there's a reason for this, very clear. The NASDAQ 100 tech-heavy index massively outperforming the Hang Seng Tech, which is the Hong Kong-listed China tech shares. The story for the NASDAQ 100, AI, giving momentum and investor interest in the tech sector year-to-date. Not so much in China, and I say that, Carrie, because this week we expect China's regulators to show their hand in terms of how they plan to regulate AI in that country. We know about the domestic players. Speaking of those domestic players, let's bring up the calendar for China Tech this week, Caroline. Talk me through this, because it's a busy week ahead for earnings out of China.
It really is. We got already Alibaba kind of making us all take a breath last week, seeing their actually outperformance. Can that be reiterated? August 16th, we look at Tencent, Thick and Fast, JD.com, but also we have the likes of, well, of course, Baidu, Meituan, of course, a key focus of consumer, of desire to be purchasing, and the ability to spend at this moment when we do see a Chinese authority that's having to push on the economy. Unlike here in the US, where we're worrying whether the Fed is going to be, of course, raising rates, having to slow down the economy, we're looking at rate cuts in China. We're looking at a macro picture that perhaps could be headwinds for these big tech companies. But also, though, Ed, I think it's good that you point out just how far these companies, yes, they've underperformed the US, but some of these companies have really added to their market cap since May, for example. This is all about a regulatory overlook, really, the way in which we see a changing of the pendulum swing, that perhaps we'll see more support for the tech sector in China.
It's always this way in earnings season, no different in China. The expectation is at odds with the backward-looking data. So the previews for Tencent and JD both hit the Bloomberg terminal this morning. Tencent expected to record fastest pace of revenue growth in over a year, fueling hopes that the biggest internet arena in China is rebounding. JD, similar story. Physical goods rebounded last month. JD is going to be fine. The news overnight and the data doesn't tell us that, and it's a completely contradictory picture.
And I think that's why we want to think about the macro affecting the micro. Let's bring in Amy Selico, Albright Stonebridge Group Principal. And we've really sort of discussed it out there a bit, Amy, of how oddly, and I'm hearing it from the likes of JP Morgan, their view is really we could see big tech outperform the rest of industrials, particularly the banks, real estate over in China, because actually the regulatory hurdles are pulling back while macro headwinds are affecting the other sectors. Does that ring true to you?
Well, what's ringing true so far is just how negative the numbers are coming out of Beijing. So we're due for some good news, hopefully with the tech companies' numbers that you're talking about. But let's just talk for a moment about what's just come out overnight. I mean, the latest numbers coming out of China continue to show that high-tech manufacturing is down, overall exports are down, consumption is down, property market sales are down. The government, as you just mentioned, Caroline, is reacting by cutting rates in order to try to stimulate business and consumer lending. But to date, that hasn't happened. They've stopped actually tracking youth unemployment rates because those numbers continue to rise. And overall unemployment actually rose a little bit this past month. And so, again, the overall picture is difficult. So we need to see some good numbers coming from the tech sector companies, and those numbers need to reinforce that there is potential for those companies going into the second half of the year.
Amy, here on Bloomberg Technology, we talk about the Fed and higher interest rates because they discount the present value of future cash flows for the tech sector, right? Impacting public companies, but also by peer proxy private companies. Explain to our audience why China cutting interest rates would impact China's technology sector or help to support it.
Well, China's technology sector, of course, has really been beaten up over the past couple of years because of the Chinese government's overall rectification campaign, really looking at the tech sector, not helping it continue to grow, but really overseeing some of the biggest companies being taken apart so that the government can control them a little better. However, this year, the story is very different. The Chinese government, looking at the overall macroeconomic picture, recognizes that the private sector, the most innovative companies in China's private sector being technology companies, need to have the confidence to continue to grow, to borrow money and continue to invest in the domestic economy so that they can get consumers out there spending using some of those tech platforms. And so lowering the rates, what the government did again overnight, is meant to really be a signal to tech companies and other companies in China to borrow more money to continue to grow.
Caroline, this is such a timely conversation because we're talking about China's domestic economy, and at the same time, a lot of the news cycle is about its standing in the world and what international powers are doing vis-a-vis China. Yeah,
we're all waiting, of course, for Raimondo to go out. Of course, are focused on commerce. We've already had Treasury Secretary Yellen out in China, all amid yet more and more sort of adversarial comments coming from President Biden himself when it comes to leadership in China. Amy, from that perspective, how do you see the tensions about us, or indeed US investors, putting money into Chinese names? Is this something that they should be reticent of doing at the moment?
Well, the U.S. government is demonstrating that it does want to restrict some areas of outbound investment flows to China. Just last week, of course, dropping the long-awaited executive order by the Biden administration, which will create a notification system and some restrictions, again, very narrowly focused, even within technology, on AI, quantum computing, semiconductor, U.S. investment into China, into areas of concern, because the administration sees some U.S. investment flows going to help China's military modernization and it developing its surveillance industry. And so some areas are going to continue to be restricted. However, I do think it's important to say that with Secretary Raimondo on her way, after Kerry, after Yellen, after Secretary Blinken already visited China, we've invited China's Foreign Minister Wang Yi to come to the United States. The two sides are trying to navigate this very difficult relationship. Neither side is willing to say they're going to let up on technology,
Yes.
both restrictions if they impact national security.
Amy, how important a battleground is artificial intelligence to China?
Oh, it's critical. It's absolutely crucial. And so these export control restrictions, as well as this new outbound investment tool to restrict some U.S. flows, are going to be very important for China to look at, to see if other countries emulate those outbound investment restrictions, specifically in AI, because the Chinese government doesn't really have the ability yet to be able to domestically produce a lot of the technology, particularly the hardware, necessary for many of those AI applications. And so continuing to invite, encourage, supervise technology investment into China is important. So important that the State Council just on Sunday released new rules that are encouraging inbound investment into China in many technology sectors.
All right, our thanks to Amy Selico, principal of Denton's Global Advisors Albrecht Stonebridge Group, one of the advisors in the China space. Let's stay in the region and think about Taiwan. Taiwanese Vice President Lai Ching-te is seeking to reassure voters that he's a steady set of hands as he campaigns to become the self-governed island's next leader. He spoke exclusively to Bloomberg Businessweek in his first interview with international media to tell us about managing relations with mainland China and the expansion of chip manufacturer TSMC.
我们必须要根据事实，就是说我所谓的务实。
We must abide by the truth, which is what I mean by pragmatism. It is that Taiwan is already a sovereign, independent country called the Republic of China. It's not part of the People's Republic of China. The ROC and PRC are not subordinate to one another. It is not necessary to declare independence.
另外宣布独立。
What is your roadmap to formal independence?
因为我的责任就是维持台海的现状。
My responsibility is to maintain the status quo in the Taiwan Strait while protecting Taiwan and maintaining democracy, peace and prosperity. So no such framework exists. We must work to maintain the peaceful status quo because Taiwan is already a sovereign country.
How confident are you that the U.S. will have Taiwan's back should the situation with China escalate?
美国是台湾的好朋友。
The US is a close friend of Taiwan. We are partners in a number of areas, from politics, the economy, human rights, to our society.
因为台湾的安全问题。
Because Taiwan's security challenges are a global concern, the upkeep of peace and stability in both the Taiwan Strait and the Indo-Pacific region fulfills the common interests of the international community. I believe that all democracies in the world, including the US, would be aware of how to respond if such a scenario were to take place.
What do you want the world to know about you as a person?
我是一个理性。
I am a rational and steady leader. I know how we can respond to the challenges we face as a country. I also understand that the serious and complex nature of issues in the Taiwan Strait call for rational and steady leadership. This will enable our country to move forward amid changing geopolitical circumstances.
往前继续走。
That was indeed Taiwanese Vice President there in a Bloomberg exclusive. Now, coming up, we're going to be joined by Toy Lee, VinFast CEO, to discuss the electric vehicle maker's NASDAQ trading debut. Boy, Ed, did it have a pop.
Yeah, big focus today on Asia tech, actually. I'm going to go over to Singapore and look at C, the tech giant's US ADRs dropping the most on record after sales missed estimates, but a really sharp decline, not just in the e-commerce business, but gaming revenue as well. That's C Limited, the Singapore tech giant. It's definitely a name we've not spoken about in a while, but my goodness, look at that result. This is Bloomberg Technology. VinFast, Vietnam's largest electric vehicle maker, saw shares surge in their NASDAQ trading debut after merging with SPAC Black Spade Acquisition. For more, let's bring in Toy Lee, VinFast CEO, who's live with us from the NASDAQ. An impressive debut after the SPAC transaction closed. VinFast had told Bloomberg that the purpose of going public via SPAC was not to raise funds, Madam Tui. Was this just a marketing exercise to get VinFast's name out there?
Thank you. We have been working on the U.S. listing for like 2 years, and we're very happy that we made it today. VinFast has become a publicly listed company in the U.S. It's not just it's not a marketing. It's just a milestone that we want to achieve as on path of becoming a global company.
Madam Tui, I've covered many electric vehicle makers that have gone public via SPAC. I won't list them, but not many of them have been successful thus far. Do you need to raise more capital? Are you speaking with sovereign wealth funds, as an example, to raise capital to grow quickly here in the United States?
I mean, one thing you should notice that we are very different from a lot of EV companies that have gone public by way of SPAC. We already have a lineup of vehicles. We have 7 models of EVs that we have announced to the market. We have manufactured about 100,000 vehicles. We have delivered close to 20,000 EVs, mostly in Vietnam, but also in the US, and we finished the homologation of our vehicles to the EU. So we are very different from other companies because we are a lot more ready when we get listed.
Madam Tui, talk about those global ambitions, because you say you're different from other EVs, but what many an EV experiences during growing is recalls, is perhaps the odd critical, unflattering review, and you haven't managed to avoid that thus far. How do you navigate that here in the US to rectify some, perhaps, the PR hit that you sustain from those poor reviews and recalls?
Actually, if you look at the reviews or the publicity about us, most of them are positive or at least neutral, right? Let's wait and see. There have been some like negative reviews. We take them very close to our heart. We reflect on the feedback of from those reviews, and we make our vehicles better. We update the software when we make the vehicles better. We actually really appreciate the feedback from the public, from the consumers, because it's a way for us to become better.
And it affects your own workforce. Talk to us about the US workforce. You consolidated it, saying goodbye to certain individuals, put together North America more broadly. Are you going to expand? Because I know you're going to put manufacturing here.
Well, I think VinFast and Vingroup, we always continue to optimize on our resources. And restructuring of North America was just part of the optimization of the resources. We always try to become better. In the U.S. with the North Carolina plant, we started expanding, we started hiring people. I think we at the early stage of building the plant out, but as the plant go into getting closer to opening, then we start bringing in more people.
Your founder committed about $2 billion of his own personal capital to VinFast. Will the founder have to put more money in? I just want to go back to this idea of sovereign wealth funds as well. You know, in terms of a capital need, where are your priorities to raise?
We have the commitment from our shareholder Vingroup and our chairman up to $2.5 billion, so that will help us continue on our path. We have been talking as part of the traditional IPO. We were talking with a lot of the investors, and after becoming public today, we will continue the dialogue with a lot of the investors, sovereign wealth funds, but many other institutional investors as well. When the time is right for another transaction, or for the transaction to bring in significant funding for VinFast, we will do so. Meanwhile, we have very regular conversations with our with potential investors.
And I'm sure they're eyeing the success of this particular SPAC listing thus far. We thank you so much, Madam Tui.
Thank you.
That is Tui Lee. the VinFast CEO, live from the NASDAQ. Meanwhile, coming up, we're going to be sticking with all things EVs, particularly as Tesla looks like it's, well, new lower range iterations of the Model S and Model X are continuing to put the downward pressure on the prices. From New York, from San Francisco, this is Bloomberg Technology.
Time for Talking Tech. First up, Tesla is adding new lower range iterations of the Model S and Model X to its lineup that cost $10,000 less than their previous base prices. Plus, in Beijing, the government will implement sweeping new regulations for artificial intelligence services this week, with 7 agencies taking responsibility for oversight. And finally, Michael Burry's Scion Asset Management exited its stakes in Alibaba and JD.com in the second quarter. 13F filings show the firm exited its positions in the Chinese tech giants that had been the hedge fund's biggest holdings. Caroline.
Isn't that interesting, Ed, as we were just talking about China, about the earnings coming up, about, well, some of the reticence, whether that pushback against regulation can begin to continue the grind higher in these stocks. Let's talk to Shonali Basak, who's here to talk about, well, it wasn't just Michael Burry making moves in tech stocks. Where else did you see some of the movement?
Yeah, and importantly with the 13Fs, when we take a look at these movements, these are from the end of the second quarter. So it's been weeks since then. And the reason I say that is because some of the most interesting movement happened among the most high-profile hedge funds, particularly in the technology world. So who are they? Chase Coleman, for example, Tiger Global, there were a significant amount of sales. They had reduced its tech stakes by more than 5%. You have the same thing at Maverick for Lee Ainsley. And if you take a look at what they did in the quarter alone, they sold out of 186 stocks. They added 129. So there's a lot going on over at Maverick. But the tech stakes were reduced by about 3.5%. Now, remember, when you look at the entire industry, all global fund managers, hedge funds, sovereign wealth funds, pension funds, tech was increased quite meaningfully. And so this is a bit against the grain. Coatue as well, another Tiger Cub, when they trimmed their stakes, they trimmed NVIDIA, Meta, Tesla, Netflix. And so some of this could be just profit taking. However, it is interesting to see some of the biggest Tiger funds go into different places. You're looking at Tiger Global, for example, and its Apollo stake, and D1 as well, going into real estate investment trusts. So looking for other places as they seek to capitalize on this part of the market.
There's also the acquiring part. We're talking about Michael Burry. Scion Asset actually ended with Expedia as its biggest holding, adding 100,000 shares worth $10.9 million. Bloomberg, Shonali Basak, and all things 13F. Thank you. Coming up here on BTech, new proposals backed by Netflix and Disney to the Hollywood writers. When will the strike come to an end? We're going to give you some new details next. From San Francisco and over in New York, this is Bloomberg Technology. Welcome back to Bloomberg Technology. Ed Ludlow here in San Francisco.
Caroline Hyde in New York. Let's check in on those markets. Look, we're about halfway through the trading day, Ed. And some of the strong economic data means it's good news means bad news when it comes to the stock market at the moment. We've got caution out there. Look, it's not just caution about retail sales that grow faster than anticipated and what the Fed needs to do to just pull back on this U.S. economy, but also China. We see the moon music there a concern as we see the economic data coming in weak, even though we get that extraordinary rate cut in China, not enough to change sentiment at the moment. So I'm seeing the NASDAQ 100 up by 0.6%. The Golden Dragon, NASDAQ Golden Dragon, some of those big Chinese tech names traded here in the US off by 1.6%, even though we have thick and fast some of their earnings, which, remember, Alibaba looked good last week. We're looking at a 10-year yield that just is flat on the day. We had seen some buying, dip buying, let's call it, after yields pushed higher. But at the moment, we're just steady on the 10-year amid what we're trying to see, the push and the pull of really where central banks go, particularly in the UK as well, as wage growth ramps up. Let's have a look at some of the individual names. Just briefly, I want to shine a light happening with NVIDIA. Most points added to the NASDAQ 100 coming from this particular name, up more than 2% as we see, well, UBS follow Morgan Stanley, bullish, say it's the kingmaker in AI. We're looking at Grindr up 12%. It was up more than 20% at one point. Its earnings looking good, raising its full year guidance for the LGBTQ app. And I'm looking at Tesla, off by 2%. I know you know this more than anyone, Ed, but this is all about, of course, prices coming down. Here in the US, they came down in China. This really does seem to be focusing on volume over profitability for the time being, Ed.
Yeah, big time. It's not a price cut, but in aggregate, it's 2 days of them lowering prices. It's a good spot. Now, Hollywood studios have made a new offer to striking screenwriters. The proposals include sharing of viewer data on streaming and assurances to the screenwriters that AI won't replace them. That's according to Bloomberg sources. For more, let's bring in Bloomberg's entertainment editor, Chris Palmieri. We have a lot of details about what this August 11th offer was, Chris. Just run us through them.
Yeah, as you mentioned, these are some big concessions because they were real sticking points that had the whole deal falling apart last May. So artificial intelligence, previously the studios weren't saying any definitives. They just wanted to keep meeting to discuss it. Now they're saying they're going to put something in writing that says writers will still have jobs. Streaming data, this was a huge thing because in the streaming era, there's no actual data available like in the Nielsen ratings on how well shows are doing, or at least not shared publicly. Or even privately with the writers. So there's some assurances that that will happen. Also, another big deal, this issue called mini rooms, which are smaller groups of writers that meet before a show is picked up. There's some assurances in the new proposal that they'll have, if not specific number of writers employed, at least some guarantees on the hours that they're paid for.
This is a media story, a labor story, but it's really a tech story when you're thinking about the protections around artificial intelligence, when you're thinking about, of course, ultimately how they get the data in terms of how successful their writing is. Chris, how does this play out now for actors as well?
There are many of the same issues that the writers have, that the actors have as well. And indeed, we reported Nielsen data from this morning that shows this is the first time ever that traditional TV has fallen to less than half of all viewings. So this revolution that's happening with streaming is accelerating, and the writers and actors have said that the contracts that they've signed in the past just don't reflect these new technologies.
Yes. Residuals, Chris, are a big part of the compromise. Explain what a residual is and what is on offer to the writers.
Residuals are when a writer gets paid after the first airing of a show. So let's say you write a show for CBS. CBS then sells it in syndication to a cable network or a streaming service. And historically, writers and actors, everybody in the business has made a lot of money off those after sales. What happened in the streaming era is that Netflix would buy a show and keep it on Netflix, and there wasn't all of that money in residuals in the streaming era. So new proposals are for increases in the pay that the actors and writers get for that.
He breaks it all down for us. Chris Palmieri, we thank you so much for the latest in this ongoing, well, let's call it a saga, because we want to go even deeper into it with a man who really understands the world of content creation and syndication. Stephen Will Ferreira is with us of 3Pass Studios. And we've talked about this a few times with you, Stephen, and indeed the changing world of production. From your perspective, was this good news? Do you think that this will end the strike? How important is it to end the strike?
Look, thanks again for having me. Any conversations are good because they have not been talking, but the reality is they're still very far apart. And Labor Day is almost upon us. That's typically the kickoff of the fall broadcast season. So if this continues past September and really starts to get into the October timeframe, it's really going to impact production. It's going to impact all the new series, certainly sports, kind of animation, scripted. All these things are going to be up in the air, obviously unscripted as well, late night. But the truth of the matter is you're talking about the elephant in the room, which is AI. And, this whole conversation has really been around 3 C's. It's been around consent, it's been around compensation, and copyright. And the truth of the matter is AI is not going to take someone's job. It's someone using AI.
I see. And so to that end, a lot of the, I don't want to call it hype, but a lot of the headlines that have been around this worry about artificial intelligence, do you think it's right that they should be so concerned around it?
I mean, I think yes, because the truth of the matter is we typically overestimate technology in the short run, but we underestimate it in the long run. And the truth of the matter is this is not new. I mean, there's always been new technologies coming into Hollywood, into every industry, and we have to adapt to it. When you see all of the power of generative AI, how it's going to really streamline the pipeline, the production processes, whether the development process, it's going to get used. I mean, people are using it today. And the truth of the matter is, look at where folks are going to. When there is no content being done by either the studios or, all the issues with, the guilds, people are going to TikTok, people are going to Twitch, they're going to go to other places, other creators that are going to be making content. And I think it's really important that everyone understands that they have to come together for this industry to be sustainable and for it to be economically viable.
There was a part of the Bloomberg report we did not get to with our editor, Chris Palmieri, which is, according to our sources, Ted Sarandos, the Netflix co-CEO, and Bob Iger have come in very recently and started to weigh in on these negotiations. How much of a signal is that to you, that it is getting painful, the halt in production that's taken place as a result of these strikes?
I mean, it is painful, but I think you really need to bifurcate on the studio side, the two different groups. There are the technology companies, and then there are the traditional media companies. And certainly they both have different interests, but they have to come to the table. And look, we really are lacking any true ambassador in the industry. I think Bob Iger really takes that mantle, and he's been doing his efforts to really kind of bring people to the table again. But the truth of the matter is, how do we resolve this? Because it is going to impact the whole industry. Content will continue. Technology continues to innovate. And if folks don't figure out how to make content, how to bring all parties together so that it's going to be truly a win-win. I mean, when you think about studios, when you think about actors, when you think about writers, they need the data. I mean, this really is a story about data. We actually have a couple of films coming out this fall. We have Aristotle and Dante. We have a film called Radical that won at Sundance. We have things happening in Spanish language TV. So, the truth of the matter is, us as a studio, as a production house, we need the data from the streamers so that we could understand our audience, understand what's working, what's not working. And so any type of concession where it's truly going to be a win for the strikers, but as well as for the studios, we have to bring everyone together, because if not, people will go to different places. The audience is always going to seek out entertainment wherever it's going to be viable.
You mentioned some key words there: streaming, content. Caroline made this point earlier. It's a technology story, but there are essentially two different industries here. There's the legacy production and entertainment industry. Then there's the tech players. So how does it end differently for both?
Well, I mean, if we're really being blunt about it, the truth of the matter is the technology companies, this is almost like a side hustle for them, right? I mean, whether Apple is going to figure out what to do with, kind of their content, they also have their core business, which is, making hardware, making software, and making services. Same thing you could argue for a lot of the other tech companies like Amazon. But when it comes to the traditional media companies, I feel like they really are trying to figure out how to make this leap. Certainly, analysts have been talking about it, and you see all of Wall Street really starting to punish, the media companies because they haven't figured this out. So I feel like it's in everyone's best interest to get to the table, really start to share the data. I don't understand why we cannot have transparency and understanding the audience. It's good for the streamers, it's good for the writers, it's good for the actors.
Yes.
And in day and age, they need to understand their audience.
Stephen Wolf Pereira, 3 Studios, always on the news, but always pretty straight talking about it as well. Thanks for your time. Turning to another story we're following in the space, by the way, content streaming. Cable and traditional broadcast channels fell below half of all viewing for the first time in July. That's according to market research and Nielsen. The data shows that streaming hit a new high last month, as broadcast fell to 20% of all viewing, cable to just 39.6% of all viewing, and then the streamers, led by YouTube, Netflix, and Hulu, accounting for 38.7%. The rest, video on demand. Caroline.
Fascinating. It's all about the data at the end of the day, isn't it? It's also about data and diversity. We want to talk about that. In the VC landscape, Masha Butcher is going to be joining us, founder and general partner at Day One Venture. How she's prioritizing, diversity in her portfolio companies. Then we want to just look at also this AI focus. We're going to end the conversation on AI and really bring in how you're dealing with it, perhaps with kids going back to school, to the classroom. How are teachers dealing with it? We've got artificial intelligence from both value and challenge for educators at Power Schools. This is Bloomberg. Time now for VC Spotlight. Look, something that we want to talk about time and time again is diversity, how you're investing in it. Diverse entrepreneurs in particular, whether women or people of color, seems now to be a good time to be investing in them, according to Masha Butcher, founder and general partner at Day One Ventures, joining us now from Zurich. And Masha, I'm going to ask you to put your money where your mouth is, because the money you do have, assets under management, 100 million, you've got a couple of funds. Who have you backed that really you feel is the pin-up thus far in terms of diverse founders making great change in the world of technology? Where have you written the checks?
Well, we're proud to say that compared to many VC funds that's operating right now, we have positive IRR over 40%, and 62% of the fund to money came into diverse founders, either founders of color or female founders. And we do back different companies. We backed a number of companies in enterprise software space, AI, climate, creator economy, and fintech.
What's interesting is there's the fear and the optimism. Weigh it for us. Many were worried in this economic environment where people start to claw back, don't want to be writing checks in such an environment where valuations fall. People were worried that they'd just return to tried and tested founders who quite often are white men. Whereas on the other side, there's this view that founders who are diverse haven't had the luxury of big family and friends rounds and are basically able to spend and think more wisely. Which do you fall on? How are you seeing this play out?
Well, I think I really want to back founders that has capacity, talent, and grit to come through hard times. And I think times like that are right now. I think founders from diverse backgrounds has better capacity to go through hard times and optimizing company growth to the economic environment. And the numbers that we have is something that's been proving it. So I think it's really about like character and types of the people you backed. We always focused on the founders that could, on the one hand, be extremely smart, knowledgeable about the topic, on the same time resilient in downtimes. We backed a number of entrepreneurs. We backed dozens of female founders. And I think some of the founders like that are the ones that's thriving right now. For example, in our new fund, few founders that managed to bring company over break even are female founders that didn't start companies before, but succeeding right now.
Masha, you're joining us from Europe. What opportunities do you see in European tech?
Well, we invest around like 85-90% of capital in the United States. I do think, though, there are a lot of really successful European founders with very strong technical background. I think, for example, one founder, Alex Blania from WorldCoin that you had on your show, he comes from Max Planck and Caltech, and he's from Germany. We also backed founder of Remote.com, who's also in Europe, and I think strong technical engineering background is something that's always been differentiating European founders.
You mentioned very briefly AI. What opportunities are you looking for specifically in AI, and how are you kind of seeing valuations in the space?
I've been investing in AI since 2016 when I saved some of the money that I had from my second company and became angel investor. Actually, my first angel investment was in AI. So since then, I invested in 35 AI companies. I've been investing lots of AI in downtime, not in uptime right now. So in a very, very modest, very reasonable valuations. I think out of 35 companies in AI space that we backed around 95% of them before the AI boom. So right now, leveraging the time and valuations are really up, but at the same time, we've been early in these companies. I think generative AI space is extremely exciting. There are like a number of exciting companies like you.com. At the same time, the applications in AI that we look at mostly related to either robotics or intersection of AI and biotech. I think that's where new innovation going to be. And we don't look at generative AI space just because it's so crowded and so competitive. And we also made number of our bets in the last 3-4 years.
All right, Masha Bucher, Day One Venture founder and general partner, joining us there from Zurich. Thank you very much. Now, lots of you out there are heading back to school, whether you're on the East Coast, the West Coast, or Europe after a pretty nice summer. The word-of-mouth popularity of large language models, we're just talking about them, like ChatGPT, has set the academic world ablaze after it was introduced in November last year. But as students head back to school, some educators are attempting to incorporate artificial intelligence into the classroom. PowerSchool is the leading provider of cloud-based software for K-12 education. That means young children here in the United States. Recently announced as well that Microsoft's Azure OpenAI services are going to be integrated into its teaching tools and will be available to pilot this fall. Joining us now, PowerSchool CEO Hardeep Gulati. There's an academic debate in and of itself about whether AI should already make its way into the classroom. Just state for us yours and PowerSchool's position on that.
Sure. Thanks, Ed and Caroline, for having me on the show. You're absolutely right. This is a pivotal moment in education in terms of really embracing the generative AI technology. I think one thing you will resoundingly believe in from every educator, from every teacher, from every family, is that we need to make sure that we can personalize education for every child based on where their focus areas are and how we support. I think the one-size-fits-all has been a challenge to really be able to address some of the learning gaps, engaging every student, address the equity issues. And generative AI actually gives us an opportunity to really personalize education at scale. One of the challenges teachers face is incorporating personalized instruction and personalized assignment. It takes many hours for them to do that in a class when you have 25, 30 kids or multiple sections. What we are incorporating with collaboration with Microsoft OpenAI is really bringing the personalized lesson planning, personalized assignments in the hands of the teachers. So now that saves them hours of time, addresses the teacher burnout, and have personalized education for every child.
What's interesting, Hardeep, of course, is while you've been thinking of this integration, you've also been thinking about some of the concerns surrounding AI. Not only, of course, is that suddenly, well, kids can perhaps fake some of their writing, but that aside, we know that there's AI tools to see when they're being truthful. But I'm interested in some of the, well, cyber issues, making attacks more likely, more prevalent. How are you seeing that as an area of your focus?
Sure, Caroline, that's a great point. As you remember, we actually are a technology provider for 80% of the North American school districts. So about 15,000 school districts, 90 of the top 100. One of the things, as you can imagine, we get the front row seats on both in terms of the ethical use of AI as well as the privacy and technology and security protection. I recently was actually last week in White House Cybersecurity Summit for K-12. And we shared that just on the PowerSchool solutions with serving all these districts, we successfully defended our districts against 1 billion cyber attack events. By leveraging modern cloud-based technology, by investing in the cyber security elements, we are able to really support these districts because they already have dozens, if not hundreds, of technology infrastructure, many legacy, many manual points. All those things actually create challenges and vulnerability which districts don't have the resources. So we are providing even subsidized and free security as a service so we can support districts in adopting the technology more easily, modernizing their infrastructure, and being able to support and empower every teacher and student.
And Ed, it's interesting, isn't it? I've spoken before at sort of charitable events with teachers who are concerned a lot of the time, IT teachers, tech teachers, about how a lot of their students know more than they do. This is also about increasing literacy across the board, about artificial intelligence in and of itself, right, Ed?
Yeah, simple question, Hardy. Should AI, or at least computer science, be a bigger focus on curriculums worldwide?
Absolutely. In fact, we joined the Code.org Teach AI movement because not only we are enabling AI to be within the PowerSchool technology, but we're also making sure that we can actually incorporate that into the teacher professional learning solutions as well. We actually serve half the U.S. school districts in teacher recruitment, substitute teacher, as well as teacher professional learning solutions. So we're incorporating all that into the teacher's tool itself. Another exciting stuff is some of the work we are doing with states like Alabama or Montana. We're actually giving them a K-20 view using our data platforms to actually allow them to understand what are the career pathways and how you actually bring that into the K-12 itself so you can better support the economy. So we, again, have an opportunity to actually support these districts in modernizing their curriculum. But the key element I think both of you are hitting is the context. What we want to make sure is that AI is not replacing the teacher. It's actually augmenting the teacher. It's supporting their workload. It's helping them with the burnout issues. And also it's in the context of how we are actually teaching today.
Hardeep, great to have some time with you. Hardeep Gulati, CEO of PowerSchool. This is Bloomberg Technology. Interesting one out this hour. Google expanding, Ed, its generative AI tool to select sites, not just its own search engine, actually allowing you and me to experiment with the new features that display content created by AI. All of this, of course, as Microsoft seems to be perhaps looking at targeting search.
Yeah, there are limitations like paywalls, for example, but remember what they said at Google I/O, slow and deliberate rollout. This goes beyond search now to third parties.
One to watch. Meanwhile, that does it for this edition of Bloomberg Technology.
Recap, podcast, Apple, Spotify, iHeart. This is Bloomberg Technology.